Yo, what's going on, guys? Fortune Mesh here, and welcome to another video. And welcome if you're new. Don't forget to subscribe. So today we're going to be explaining my model, or which I'd like to call it Fortune's model. And on this model, I'm going to explain everything on how I approach the market every day and every trading day. My model is time-based. The key times includes the midnight open, the opening bell, this the opening range, which is 9:30 to 10 a.m., the silver bullet window, which is 10 a.m. to 11 a.m., and also the macro for price to accelerate 2 hour liquidity really quick. So every day I go into the market with the perspective of how I would like to see the daily candle form. So if I'm bullish, in this case we're using a bullish scenario. If I'm bullish, I want to see price open and have the low of the day, then create the high of the day, then we have the close. But if when we look to the left and you think of the power of three, we should have the accumulation phase, the manipulation phase, the distribution phase, where we are likely to get entries from, because this is the expansion where we create the body of the candle. So this is where we want to position ourselves. And if we were able to position ourselves just right there, the premium PDI rates such as new day opening gaps or FVGs imbalances, that's where we actually take our partials, because if we earn premium we could expect to see price sell. So in that case you should be safe and take a partial, then leave the rest to the key levels being the previous day high, the key liquidity levels being the previous day high, an old high, imbalances, or relative equal highs. That's basically how I frame the daily candle if we are in a bullish scenario. So the two most critical time references in my model are the midnight open, which is midnight open, and the opening bell. If I have a bullish bias, I want to see price trade below the midnight open, just as you can see there, leading into the opening bell, 9:30 a.m., often referred as the Judah swing, a deceptive move that leads traders into a deceptive move that leads traders in a wrong direction, usually lower on a bullish day. So we manipulate people thinking they should see price continue lower, then we react on a higher time frame PDRA, then we change direction to moving higher, taking everyone out. Once that manipulation phase is complete at 9:30 a.m. and price shows a clear willingness to move in alignment with my bias, I look to enter in a direction of the intended move, targeting key liquidity levels such as old highs, previous day highs, imbalances, and relative equal highs. The same logic applies in the bearish scenario, just inverted. And also, I avoid trading within the opening range, which is 9:30 to 10 a.m. if there's high impact news event scheduled during that time. The volatility and unpredictability can distort price behavior, often serving as manipulation. Instead, I focus on the silver bullet window, which is 10 a.m. to 11 a.m. Eastern time, a time when the market often delivers a cleaner and more defined setup aligned with the day's narrative. So I hope that makes sense. And now let's get to the examples of how I approach the market using Fortune's model. So now let's go to the first example, the bullish example. So in this case, we have this range low and this range high. And I need you to focus on the midnight open. So at the midnight open, price just traded lower from that midnight open, which is a good sign. If you are having a bullish bias, then price continued to go lower, taking out this low and also taking out this low, then reacting on this FVG, which is in discount. If you anchor your fib just from this range low to the range high, price traded into discount, taking liquidities. And everyone from the midnight open, if you think who has been making money, so everyone who was selling from the midnight open has been making money, and now we have to buy and take them out. So I hope that makes sense. So now we trade into the discount, taking the sell side liquidity and also reacting on this FVG. Now I need you to focus on this wick that was creating the low of the day, and what time did it create or form. So now let's go to the lower time frame. So basically this is where the wick was formed. This is the 1 minute where we take our trades. So 9:30 a.m. price went lower, reaching into that high time frame PDRA FVG, then went a little bit higher, taking buy stops, then continuing lower aggressively. And why did this happen? This basically happens when they lead people to the wrong side. This is the deceptive move. Everyone is continuing to sell here because now we are at the opening bell where we're expecting to see some volatility. A lot of people are excited to see this movement and trying to chase it. Then we react on that high time frame PDRA FVG, then continuing higher. And what we know about our first presented FVGs, they can act as support or resistance. So price just turned from there, respecting the FVG going higher. Then this is where we're expecting to see price now get support from the first presented FVG. As you can see, we closed above that first presented FVG with this green candle. The next candle also was closed above the first presented FVG. Now check how we expanded higher from that one. Sorry about that. The price just rebalanced, went higher, closed below the 3 consecutive down close candles. And what do we call those 3 consecutive down close candles? This is our bullish order block, and where we have our changing state of delivery. Why is this the changing state of delivery? Price has been delivering lower from the midnight open, and now we just broke this significant high, forming the 3 consecutive down close candles, being our changing state of delivery. And also, if you check here, we have the low here, the significant high, then broke this low and went higher to break the significant high. This now forms our bullish breaker. So we're expecting also to find support from this green candle, continuing higher. So one could have a trade here after we manipulate everyone thinking price should continue lower, then take a partial away in our premium FVG. Remember what I said? This is where we take partials because price could reject from it and continue low, and anything can happen. If you want to sell, we want to sell in premium, and if we want to buy, we want to buy in discount. So in this case, we have an FVG in premium, and price just spent a lot of time in it. This is why it is important to have a partial. So now when we traded above this high, confirming our change in state of delivery and also confirming the bullish breaker, this is where we are expecting to see price get support from. So in this case, we have this BC right here. Nice reaction on this BC after we closed above the 2 candles here, which formed the CISD and the bullish breaker. So we reacted nicely and got support from them, continuing high. So one could have a trade here, and also another one could have a trade here, which is really good. And once price reaches the 15-minute premium PDRA, that's where you have a partial and leave the rest for the previous day high or whatever liquidity you're aiming for, and put your stop break even to run risk free. That's really important. It's really important to pay yourself. So let's move to another example, starting on the daily chart. So now we are this example is okay. This example happened like really recently, and price was just going high into the all-time high, forming all-time highs. So you don't want to force price to go lower when we are trading at the all-time highs. You want to see the supporting levels to see price get support higher, or to see price just react on him going high. Yeah. So in this case, we have our daily FVG and our daily week CE, and I'm going to explain how this candle formed. So price reacted into this daily FVG and now reacted on the daily week CE. What's a daily week CE? It's the 50% level of a long week. So this is our long week, and we just measure it and have our daily week CE. So price now reacted here, got support from this level, then continued higher. Now let's move to a lower time frame. When we go to a lower time frame, I need you to focus on the midnight open. Think of the power of 3 again. This is our accumulation phase. This is our manipulation phase, taking out the liquidity, outside liquidity, and who has been making money before the opening bell or at the opening bell? The sellers. Everyone who was selling has been making money, so we have to take them out. Once you take out the sell side liquidity, reacting into that daily FVG, price just continues to go higher. And when we were forming the accumulation, we left some relative equal highs here, of which one could really aim for, instead of waiting for it to get to the previous day high, of which might take more time to reach to. So now let's move to the lower time frame more. So this is the 1 minute relative equal highs there that I explained on the accumulation phase. At 9:30, this is where price was just going lower, leading people to the wrong side. So this is a deceptive move. Price continued more lower, going where? Into a higher time frame. PDRA being the daily FVG. So price took longer and it wasn't really clear. It wasn't really easy to read because a lot was just happening. And I remember this day we actually had a trade and the trade was just a loss. But the narrative we had was we had bullish buyers and we took an entry here, and I'll explain why. So now we reacted into that daily FVG where we expecting to see support, took out the sell side liquidity that I showed you, the lows that we had there. And now price started to show that it has an SMT with ES. I didn't actually highlight it, but yeah, we had an SMT with ES here. Then price just continued higher. And when price was just continuing higher, noticed this bullish breaker. So we have this low, this significant high, and price now broke this low, then went more high. This is where I want to see price act as support to then continuing higher to the buy side liquidity that I'm aiming for. So in this case, when price reacted here or closed above this bullish breaker, I was confident that price should continue high. Then I waited to see it show me the willingness to go higher. So when it created this BC here, this is where I actually had my entry and put my stop just below the down close candles that you see here, the two down close candles, of which also I would like to see them act as support. So price now took or went more lower into that breaker, taking us out after reacting when they first presented a VG, which I found reasonable because it makes sense reacting back into this bullish breaker, then continuing higher, having an FVG there, then accelerated to the buy side liquidity at the macro. The macro was at 1150 to 1210. Took out the buy side liquidity and yeah, taking out the relative equal highs. So we actually had a losing trade there, but the narrative was just good. We were bullish for the day and we wanted to see price take out the relative equal highs and also potentially reaching to the previous day high. So this is just to show that you can have a good narrative on the day, but end up on a losing trade after see price go into your direction. This happens. This is the nature of the market. You can't get them all right. So this is just to set an example that this will work, but sometimes you might take losses also. So yeah, now let's move to another example. So now we are moving to the bearish scenario. Remember what I said? The same logic applies in bearish scenarios, just inverted. So we want to see price run away from the open, going higher into the opening bell, reacting on a higher time frame PDRA, leading people to the wrong side, forming what? The Judas swing, a deceptive move, then continuing lower, take partials at the discount PDRA because now we are bearish. When you're bullish, you take partials at the premium PDRA. When you're bearish, you take it partial in a discount PDRA or a new day opening gap if it's there on the range. Then leading to the sell side liquidity, if you might have imbalances, previous day low or relative equal lows. Now let's move to an example. So now we are starting with this example, which I would like to believe also formed a bit recently, 29th of July, 29th of July, yeah. So think of the power of three, midnight open, price just created this accumulation phase, took out the buy side liquidity, and after, I did alert everyone on the Discord that price should continue lower after we took out the buy side liquidity because of this SMT formation. So ES didn't take out the high yet. It was just around here, and NQ had already taken out the buy side liquidity. So as we approach the opening bell, that's when I anticipated that price would likely go lower during the AM session, and I'm bearish for the day. So once we created this SMT with ES, I anticipated that we might create the high of the day at the 9:30 open, then we continue lower. So now I need you to focus on how price went higher at the 9:30. Why did this happen? So price has just been going higher. Who has been making money from the midnight open? The buyers have been making money. So now we should make them feel more comfortable at the 9:30 open. It happens again, they take price more higher. See that there's a really high momentum at 9:30 open, so we accelerated higher. A lot of people are placing orders here thinking this thing should continue high. So this is just a deceptive move leading people to the wrong side. Then price continues low, taking everyone out who was positioning themselves, and also the ones, now we have to fetch the ones who were placing orders just right there. So price has just been going higher, and now we go lower. Then when we close above the 3 consecutive up close candles, this is where we actually have our changing state of delivery. Why is this a changing state of delivery? Price has just been delivering higher, and now we closed above the 3 up close candles, which forms our bearish order block, where we're expecting to see it act as resistance to price continuing lower. So now when we have these 3 consecutive up close candles, price closed below them with the body of the candle. Nice reaction there. Then continued lower. This is where you want to position yourself. Actually, on this day, we also had high impact news at 10 a.m. So we avoided the opening range, and I'll show you on the lower time frame what I mean. So we had also this base here. This base acted as support of price, went higher. So now when we close below it, when you come back and close below it, we're expecting it to see it act as resistance. So this now tends to be our IFVG, where we want to see price act as resistance to continuing lower. And again, what do we have in discount? So we have this discount FVG right there. Remember what I said? In a bullish scenario, you take partials at a premium PDRA. So on a bearish scenario, you take partials on a discount PDRA. So in this case, we have an FVG there, and you will see why it is important to take partials on a discount or a premium PDRA. So now let's move lower to the lower time frame. Oh, now actually, this is our accumulation phase, this is our manipulation phase, and this is our distribution phase where we want to position ourselves. So now let's go lower into the lower time frame. So at 9:30, we see price going higher. Opening range, this is where we avoid trading. Price goes higher, forming that SMT with ES, continues low. Everyone was just happy to see this movement higher, positioning themselves. Then price just continued lower. Remember this 15-minute changing state of delivery, and everyone who was comfortable here is not comfortable at all. Going higher, deceptive move, fake move, the Judas swing. Then we continue to go lower. And now I need you to pay attention to what how price was just consolidating a little bit into that IFVG. This is why I avoid the opening range when we have at 10 a.m. high impact news. Then wait a bit more time to see what price wants to do. So this is like time distortion. So price is just taking a lot of time before it moved. Now let's go to the 1 minute on how we took the trade actually. Okay, the continuous of the 1 minute. So now price closed below that M15 BC, now turning it into an IFVG where we're expecting it to see act as resistance. So now we go a bit higher into it, creating an SMT with ES. ES had taken out this highs here, but now ES didn't take out this highs here, and NQ took out the highs. So now this is our bearish SMT with ES. Now I want you to focus on how we continue lower. We have what? Two up close candles there. This is what we call our bearish order block. Price reacts back on it into the CB. Nice reaction. Then breaks low. Now, this is where time becomes important, because now this is the time distortion. Price is just moving a little bit slower, and now I want to see it move faster to our liquidity. At what time? 10:50 to 11:10 macro. So what time did this BC form? Just before the macro, and we had our entry there at a 10:50 candle. Nice entry here, and here this is our stop here, just above that high, because we want to see if price now wants to reach more high, it should also react here. So we had a resistance level here, which would be a nice stop also. The bearish order block also, and the CB here. So now price continues lower, because now we had the macro where we expecting price to really accelerate and move with high momentum. So price reacted here, went lower, a bit more higher, broke lower also, broke this low, reacted on this other block again, and went lower. Remember what I said about discount PDR rates? This is where you take a partial. It is very important. So you take a partial here and leave the rest for the previous day low, or whatever liquidity you're aiming for. So in this case, I'm going to show you why it is important to take partials at the discount PDRA or premium PDRA. Look at how price missed that liquidity with just 1 point. So if you were in this trade, you wouldn't have taken total profits right there. But what's nice is that you already took something out here, and now you break even, or you protected a stop just right here. So you are running risk free, and you took something out, you paid yourself. So it's really important to take partials at a PDRA that's in this discount, or actually a discount PDRA or a premium PDRA. Yeah. So price took longer to reach the previous day low. So this required a lot of patience, because now it kept going high and lower, high and lower, high and lower. One could have ended the trade really bad, or added positions and making the trade a whole bad trade after he had such a beautiful entry right there. So now price took a lot of time to reach to the liquidity, of which now gets us back to how important it is to take partials. Now let's move to another example, our last example on a bearish scenario. So now the midnight open, power of the perspective, you want to see the accumulation phase, the manipulation phase, and the distribution phase where you want to position yourself. Now I want you to focus on how we created this week, being the manipulation phase. Check what time that week formed. Into that high time frame PDRA on our FVG, we took our buy side into that 1 hour FVG, and what we left here is a relative equal lows. This is what I was aiming for. So in this case, we have our week accumulation phase. As you can see there, price now continued to go higher. Who has been making money from the midnight open? The buyers. So we have to take them out. So price now reacted into that 1 hour FVG at one time. At what time? 9:30 a.m., which is now our deceptive move. Everyone is continuing to chase this movement. So when everyone is chasing this movement, you're patient to see it break lower on what? After reacting on that high time frame PDRA. So now let's move lower into the 5 minute. So I'm going to use the 5 to show you you could also have trades on the 5 minute if you don't want to trade more lower than that. So price now created this five up close candles, reaching that 1 hour FVG, and price started to break lower. These consecutive up close candles, once we close below them, that's our change in state of delivery. One could have a trade after we close below the up close candles, have an entry here, and your stop would be at the mean threshold of this bearish order block, forming the change in state of delivery, because price was just delivering high, and when we broke lower, this now tends to be our change in state of delivery. So we have an FVG, a nice FVG there. One could have a trade there leading into that discount FVG, taking out the sell side liquidity, which is our relative equal lows. So now let's move to how we took the trade. So you can see at the opening bell now, price continued to go higher into that high time frame PDRA. Everyone is just chasing up this movement. This is a deceptive move. It happens almost all most of the times actually. You should check it out on your chart and revisit more and more examples. So now we go higher. We have been going higher since the midnight open, and we continue to go a bit more higher at the 9:30 open into the high time frame PDRA, 1 hour FVG, then start to break lower. This is where you want to be ready on how you want to take the trade. So now we go lower. Pay attention to this BC. This BC acted as support one time, then pushed price higher. And now when you trade below it, I'm expecting it to act as what? A resistance level, being an IFVG. I would have placed my trade here, but there isn't like an IFVG and of which I like to use for my entry model. There is no IFVG, there's no FVG here where I could place my entry. So price now continued lower, leaving this CB right here. Nice FVG, and I had my trade there. Going lower to the midnight open, and now taking out the sell side liquidity, which is the relative equal lows into that discount FVG. So yeah, and yeah, I think that's the end of the video. I wish I could do a lot of examples, but yeah, I chose to make this video 30 minutes long, and that's the end of the video. Thank you for watching. If you found this insightful, please leave a like and a comment if you'd like to leave that. And if you want to join us on the Discord, link is down in the description. And thank you for watching. Be safe.